If you are 62 or older and you receive Social Security, I need you to stop what you are doing right now and pay close attention to what I'm about to tell you, because June 2026 is not a normal month for Social Security. Something is happening this month that is affecting millions of recipients across the country, and depending on your situation, it could mean more money in your account, a confusing deposit that looks like an error but isn't, a check from your state government that has nothing to do with Social Security, or the realization that your monthly benefit has been quietly shrinking even though you received a raise back in January. All four of those things are happening right now at the same time for different groups of people, and if you don't understand which category you fall into, you could miss money you're entitled to, panic over something that is perfectly normal, or spend the next several weeks calling Social Security trying to dispute something that isn't actually wrong. So today I'm going to walk you through every single thing you need to know about Social Security in June 2026. I'm going to start with the actual dollar amounts people are receiving, because most people have never seen the full picture of what's possible. Then I'm going to explain why so many people feel like their raise disappeared before it ever hit their bank account. Then I'm going to talk about a specific payment situation that is going to confuse a massive number of people in July, and I want you to hear this now so you are prepared. And finally, I'm going to tell you about money that is available from your state government right now, money that has nothing to do with Social Security, money that millions of eligible seniors are leaving on the table every single year simply because they don't know it exists. Stay with me through this entire video, because every section matters, and I promise you will walk away knowing something you didn't know when you clicked on this. Before we go any further, if you are not already subscribed to this channel, I need you to do that right now. Hit that subscribe button and turn on the notification bell. Here is why that matters. The Social Security payment schedule changes. Benefit amounts change. Medicare premiums change. State programs change their deadlines. And when these things change, the Social Security Administration does not send you a personal letter explaining what happened and why your check looks different. Nobody calls you, nobody sits down with you and walks you through the numbers. You are expected to figure it out on your own. What I do on this channel is track every single one of these changes and explain them to you in plain, clear language before they affect your account. That is my entire purpose here. So subscribe, turn on the bell, and let's get into it. Let's start with the numbers, because this is the foundation of everything else we're going to talk about. And most people, if I'm being completely honest, don't actually know what they're supposed to be receiving or how their amount compares to what other people get. The Social Security Administration releases a monthly statistical snapshot, and the most recent data available from April 2026 shows that the average Social Security retirement check for a retired worker is $2,812 per month. That is the average. That number sits in the middle of a very wide range, and where you fall in that range depends on three things: your lifetime earnings history, how many years you worked, and most critically, the age at which you first claimed your benefit. Now here is where it gets really important, and this is the part that most people have never fully thought through. The maximum possible Social Security benefit in 2026 is not one single number. It changes dramatically depending on when you claimed. If you claimed at age 62, which is the earliest age you are allowed to start collecting, the absolute maximum benefit you could receive in 2026 is $2,969 per month. And that is only if you had the highest possible taxable earnings every single year for 35 years. Most people who claimed at 62 are receiving significantly less than that, but $2,969 is the ceiling for early claimers. Now watch what happens when you waited. If you waited until your full retirement age, which for most people today is 67, the maximum possible benefit in 2026 jumps to $3,880 per month. That is $911 more every single month, every single year, for the rest of your life, just for waiting 5 years. And if you waited all the way until age 70, the age at which your delayed retirement credits stop growing and there is no further benefit to waiting, the maximum benefit in 2026 reaches $5,108 per month. Take a moment and let that sink in. The difference between claiming at 62 and waiting until 70 is more than $2,100 per month, every month, for life. Now, I am not here to tell you that you made the wrong decision by claiming early. Everybody's situation is different. Some people have health conditions that made waiting impractical. Some people needed the income immediately. Some people did the math and determined that early claiming made sense for their specific circumstances. All of that is legitimate. But if you claimed early and you are wondering why your check is so much smaller than what you hear other people receiving, this is your answer. The gap is enormous and it is permanent. What I will say is this: if you have not logged into your My Social Security account at ssa.gov recently and actually looked at your earnings statement, you need to do that. Not someday, now. The reason this matters is that Social Security calculates your benefit based on your 35 highest earning years. If even one of those years has an error, If an employer reported your income incorrectly, if a job wasn't credited to your record properly, if there was an administrative mistake at any point, that error is sitting in your record right now, and it is permanently reducing your monthly check. Researchers and advocates who work in this space have estimated that a single incorrect year can reduce your benefit by approximately $100 per month. That is $1,200 per year. Over a 20-year retirement, that is $24,000 you would never recover. Log in, pull up your statement, compare every year on that record against your own documentation. If something looks wrong, contact Social Security and ask them to correct it. It is your money, and it is worth fighting for. Now let's talk about why so many people feel like they received a raise back in January and then watched it disappear almost immediately. This is the most common confusion I hear about from people in this community, and once I explain it, you are going to understand it immediately, but you are also going to feel a certain frustration that I think is completely justified. Every year, Social Security benefits are adjusted for inflation through what is called the Cost of Living Adjustment, or COLA. For 2026, the COLA was 2.5%. For the average retiree receiving around $1,927 per month before the adjustment, that translated to roughly $48 more per month. Not a life-changing amount, but real money. An extra $48 a month is nearly $600 over the course of a year, and for people on fixed incomes, that matters. So when the announcement came out last fall that benefits were going up 2.5%, people were happy. They planned for that extra money, they factored it into their budgets, and then January came, and the deposits hit their accounts, and something fell off. Here is what happened. At the exact same time, Social Security benefits went up by 2.5%. Medicare Part B premiums also changed. Part B is the portion of Medicare that covers doctor visits, outpatient care, and certain other services, and the monthly premium for Part B in 2026 rose from $185 per month to $228.90 per month. That is an increase of $43.90 in a single year, and here is the part that makes this so frustrating. Medicare. Part B premiums are automatically deducted from your Social Security check before the money ever reaches your bank account. You never see that deduction as a separate transaction. It just happens silently behind the scenes. So your check goes up by $48 because of the COLA, and then $43.90 gets taken right back out for the Medicare increase. And what actually lands in your account is a net increase of roughly $4 per month. For the average retiree, almost the entire raise was absorbed by the Medicare premium increase before they ever saw a single dollar of it. Nearly 90% of the COLA increase was wiped out. And this is not a one-year fluke. This is the third consecutive year that Medicare Part B premiums have grown at a faster rate than Social Security's cost of living adjustment. Advocacy organizations that track senior finances have been sounding the alarm about this trend for years, describing it as a steady erosion of purchasing power for seniors on fixed incomes. You get a raise on paper, but by the time it hits your account, it barely exists. And meanwhile, the actual costs of groceries, housing, utilities, medications, and everything else seniors spend money on have been rising in ways that the COLA formula often doesn't fully capture. If your check in June looks smaller than you expected based on the COLA announcement, the Medicare Part B premium is almost certainly the explanation. This is not a mistake. It is not an error you can call Social Security and dispute. It is exactly how the system is designed to work. The one path that exists for eliminating or reducing that Part B deduction is qualifying for a Medicare Savings Program, which is a state-run program that can pay your Part B premium on your behalf if your income and assets fall below certain thresholds. These programs go by different names in different states, but they exist in every state, and millions of people who qualify for them have never applied because they don't know they exist. If you are concerned about the premium eating into your benefit, look up Medicare savings programs in your state and find out if you qualify. It could put that money back in your pocket permanently. Now, I want to shift to something that is going to affect a very specific group of Social Security recipients, and while it doesn't apply to everyone watching this video, I want you to hear it now, because it is going to cause a wave of confusion and even panic when it happens, and the more people who understand it in advance, the better. I'm talking about SSI, which stands for Supplemental Security Income. SSI is a program that provides monthly payments to people who are 65 or older, blind, or disabled, and who have very limited income and resources. It is separate from regular Social Security retirement benefits, although many people receive both. For SSI recipients, payments are issued on the first of every month. June 2026 was completely straightforward. Your SSI payment arrived on Monday, June 2nd, because June 1st fell on a Sunday, so SSA paid on the next business day. One payment, completely normal. Nothing to be confused about. But now look ahead to what is coming in July, because this is where people are going to start calling their banks. and calling Social Security, convinced that something has gone terribly wrong. In July 2026, SSI recipients are going to receive 2 payments within the same month. The first payment arrives on July 1st. That is your normal July payment. Completely expected, nothing unusual. But then, a second deposit is going to arrive on July 31st. And when people see that second deposit hit their account, many of them are going to assume it is some kind of error or an overpayment they are going to have to return or a glitch in the system. It is none of those things. Here is what is actually happening. August 1st, 2026 falls on a Saturday. Social Security does not issue payments on weekends or federal holidays. Their policy is to move any payment that would normally fall on a weekend or holiday to the preceding business day. The preceding business day before August 1st is July 31st. So the deposit you see arriving on July 31st is not a second July payment. It is your August payment arriving early. It belongs to you completely. You are not going to be asked to return it. It is not an overpayment. It is simply the calendar forcing an early delivery. What I want you to understand, and what I want you to share with anyone you know who receives SSI, is that after receiving 2 deposits in July, August will then have no SSI payment at all. Not because anything went wrong, not because benefits were cut, but because your August payment already arrived on July 31st. The total amount you receive across the full year does not change by a single dollar. The calendar simply compresses it in a way that looks alarming if you don't know it's coming. I am telling you this now so that when July 31st arrives and that second deposit shows up, you are not panicking. And when August passes with no deposit, you are not calling Social Security convinced your benefits were cut. Both things are normal. Both things are working exactly as they're supposed to. Now let's talk about money that has nothing to do with Social Security, nothing to do with Medicare, and nothing to do with the federal government. This is money from your state government, and it is available right now, and a significant portion of the people who are eligible for it have either never applied or don't even know it exists. I'm talking about state-level property tax relief programs for seniors, and depending on where you live, this could be a check for hundreds or even more than $1,000 heading your way this summer. Pennsylvania has one of the most well-known programs of this type. It is called the Property Tax Rebate Program, and it issues payments every year between June and July for eligible homeowners and renters. To qualify, you generally need to be 65 or older, and your household income needs to be under $45,000 per year. Eligible recipients can receive rebates of up to $1,000. Here's the critical piece of information. The application deadline for 2026 rebates, which are based on your 2025 property taxes, is June 30th. If you are in Pennsylvania and you have not yet applied, you have until the end of this month. Do not wait. Applications are available at revenue.pa.gov or at your local area agency on Aging Office, and the staff there can walk you through the process at no charge. New Jersey has a program called the Anchor Program, which stands for Affordable New Jersey Communities for Homeowners and Renters. This program provides benefits of up to $1,500 for eligible homeowners and up to $700 for eligible renters. Payments are issued on a rolling basis throughout the year, and many recipients see their money arrive during the summer months. If you filed your Anchor application and are still waiting, your payment may very well be coming in June or July. If you have not yet applied and you own or rent property in New Jersey, the application is still open at nj.gov/treasury/taxation/anchor. Go there today. New York has the STAR program, which stands for School Tax Relief, and it comes in 2 versions. The basic STAR is available to most homeowners, but the enhanced STAR is specifically designed for seniors who are 65 and older with household income under $98,700, and it provides a significantly larger reduction on the school tax portion of your property tax bill. Depending on which version of STAR you're enrolled in, you may receive either a direct check or an upfront savings applied directly to your tax bill. For most enhanced STAR recipients, payments and credits are issued in the fall, but June is when many seniors first discover that they should check their enrollment status or upgrade from basic to enhanced STAR if they qualify. If you own your home in New York and you're 65 or older, logging in at tax.ny.gov to verify your STAR enrollment is one of the most valuable things you can do this month. And I want to make something very clear to everyone watching this, regardless of what state you live in. Pennsylvania, New Jersey, and New York are just the examples I can point to specifically in this video. Nearly every state in the country has some version of a property tax relief program for seniors. Some are more generous than others. Some have strict income limits. Some have application deadlines that come up in the spring or early summer. Many of them require annual recertification, which means even if you applied and qualified before, you may need to reapply every year to keep receiving the benefit. And if you miss the deadline, you typically have to wait a full year to apply again. The The single most important action you can take right now, if you are a homeowner who is 65 or older, is to open a browser and search your state's name along with the phrase Senior Property Tax Relief 2026. Find out what programs exist in your state. Find out if you are enrolled. Find out if there are deadlines coming up in the next few weeks. This is free money from your state government that you have likely paid into through your taxes for decades. You are entitled to it. You just have to know to ask for it. So let me bring all of this together for you in one clear, complete picture, because I want you to leave this video knowing exactly where things stand. The average Social Security retirement check in 2026 is $2,812 per month, but the maximum ranges from $2,969 for someone who claimed at 62 all the way to $5,108 for someone who waited until 70. The difference between those two numbers is over $2,100 a month, and it is permanent. If you have not checked your My Social Security account recently to verify that your earnings history is recorded correctly, do that today. Errors in your record can permanently reduce your benefit by roughly $100 per month per incorrect year, and Social Security will not catch those errors for you. If your check in June feels smaller than you expected based on the COLA announcement, the explanation is almost certainly the Medicare Part B premium increase from $185 to $228.90, which took back the vast majority of the raise for most recipients before it ever hit their bank account. This is not a mistake. It is not something to dispute. But if you are concerned about it, look into Medicare savings programs in your state, which can pay that premium on your behalf if you qualify. If you receive SSI, June was a normal month with one payment. July will bring two payments, one on July 1st for July and one on July 31st as an early delivery of your August payment. Both are yours, neither is an error. August will then have no payment, and that is also normal. Nothing is wrong. And if you own or rent a home in any state in this country and you are 62 or older, there is a very real possibility that there is a property tax relief program in your state that you either haven't applied for or don't know exists. June is a critical month for several of these programs, and the deadline for some of them is right now. Search for it, apply for it, and claim what is yours. If this video gave you information you didn't have before, share it with someone you care about who receives Social Security. There are millions of people right now who are confused about their check, worried about something that isn't actually wrong, or leaving money on the table that they are fully entitled to. You sharing this video could genuinely change someone's situation. And subscribe to this channel if you want to stay ahead of every change that affects your benefits before it affects your account. I will see you in the next one.